Hello, everybody. Welcome to Thursday. The S&P 500 was down 4.8% today. This is pretty much a direct result of what happened in the Rose Garden last night after hours, where they announced all of these big tariffs, some of them which were really large, especially on China and such too. So the market doesn't like the concept of tariffs. You go back to 2018, we had these tariffs going on. The market dropped 19.6% in total before they stopped doing tariffs, and the market came back. One thing that is very striking about that is that you realize today that the market was dead wrong in 2018 by dropping that much because those tariffs are still here. Now, these tariffs that they're talking about are much bigger, much broader, much more problematic if they stay into place. But that's the big question. I mean, some of these tariffs are so large. China already had a 20% tariff, for example, and they're talking about another 34% tariff for a total of 54%. It's pretty ridiculous considering how much goods we get from China and how much problematic that would be. So it makes you think, or at least hope, that this is negotiating strategy. So what happens here is that you can threaten tariffs, but eventually, if nobody is responding, you got to kind of put them into action, and then have this window, maybe a couple weeks, a month, whatever it might be, where you can try to negotiate these tariffs. And the best case scenario would be that they get these other countries outside the US to lower their tariffs on US goods coming into their country, which helps our exporters substantially. And then at the same time, as part of the negotiation, you start to lower the tariffs that we threatened or that we've actually put into place. Stock market would do fantastic in that environment. It would go up substantially because now we just made a runway for goods to be sold at a higher rate coming out of the U.S. So I'm not saying that's going to happen, but that's a possibility for what could happen. And unfortunately, you got to pay attention to some of those possibilities because if you jump out here at this point in time, of course the market's already down 12%, but you're getting out to kind of save capital. You could have the market come back 12% really quickly, and you could make back your money if they do change their mind. And that's the big difference. So if you look at 2008, the market dropped 57% in total. And I call that a structural downturn. Just means, we lent money to everybody on the planet for mortgages, whether they could pay for it or not. It imploded the financial system. And there was nobody that could just turn around and change their mind and turn that whole market around. Well, right now, this administration could change their mind or get some success in the negotiations if that's what they're doing. And all of a sudden, the market would come right back. And so you leave tariffs on here long enough, you're going to have structural problems. You're going to likely cause a recession here. You're going to have earnings coming down and what have you too. And of course, the market is very sensitive to earnings as far as that goes. And so you're going to have some issues with that. But we do have this window. We have a period of time here where they can try to negotiate and to use this leverage. The one thing that this administration does seem to understand is that the U.S. is the largest consumer country in the world, and that gives us leverage in this particular situation because everybody wants access to the biggest customer, which is us. And we spend money, we have money versus the rest of the world, and they love sending stuff into this country to be sold. And so if we put up some barriers and make their stuff more expensive, they're going to have to respond to that in some form or fashion. Hopefully, it is by negotiating lower tariffs on U.S. goods that are coming in. Now, tariffs aren't equal across the board. Every country has different things as far as that goes, but I do think there's a possibility that this could happen, and because of that, you kind of need to stay in there. And then you look at the market from a technical standpoint. Yeah, the market's down 12%, but that's not an uncommon amount of drop. It's a stock market. You got to be able to handle the downs to get the ups. I mean, 2023 we're up 26%, 2024 we're up 24%. You're going to have some type of a down pull eventually just because we've had such a run. The average return is 11%. And when you're doubling that 2 years in a row, you're getting out there in terms of the PE ratios. And so this market is kind of resetting itself right here. Even if you ignored all the news and just knew that the 2 years before were up, substantially, you would be not surprised to hear that there was a 12% downturn that happened. Now, unfortunately, combined with the news, it makes you wonder, hey, if they're going to keep these tariffs here, this could go down farther and could have recessions and all kinds of things. But we don't know that. I would say we're going to know a lot pretty soon here, next week to 3 weeks, 4 weeks. we're going to know whether this is just something they're planning on doing permanently or if it's a negotiating thing. Now, the other parts that you want to look at here, in my opinion, is that the bond market, a couple interesting things happened with the bond market. So the overall bond market was up a lot today. It did quite well. But if the bond market was expecting a calamity, I mean, like we had in 2020, right? If you look at like the long-term bonds, like the 20 plus year bonds, they went up dramatically during the pandemic. They didn't go up any more than the overall bond market today. So the bond market is not looking at this as a calamity as far as that goes. And again, it could turn into one. The bond market can often be more accurate than the stock market if you really watch. And so, again, if you had bonds in your portfolio, that helped to offset some of the losses for the day. The other thing is that there's other parts of the country the world, sorry, that are doing quite well. If you look at the European funds today, they were down, but down like a percent and a half versus 4.8 for the S&P 500. So we have, moved in some of our models, money into these, international arenas, and helps to soften the blow. Because the alternative is to move out into cash or CDs or T-bills or whatever it might be. The problem is if they decide to do something different with tariffs and the market sees that as positive, you could see the market just skyrocket very quickly. And by the time you got back out of your T-bills or whatever it was and back in the market, you could easily have missed out on a 5 or 10% move. So um, it would be better to, at this point in time, the combination of just the technicals and how much it's fallen, or how, the 50-day moving average is still above the 200-day moving average, et cetera. And the combination of the fact that this isn't a structural downturn, this is just decisions that are happening that could be changed to turn this around fairly quickly. Those are, things that should allow you to kind of say, okay, let's wait for this for a little while. Let's continue to see how this develops. As far as that goes, so it's a very interesting time frame. It's difficult to try to be able to tell, what's going to happen. Obviously, more so than most. This is not a normal economic event that's happening, but take a look at the positives, just like we did during the pandemic. That's when this show started, and focus on some of those positives, because there are quite a few that are happening out there, and try to kind of come with a balanced approach with, what's good and what's bad. And, that'll help you, with your overall decision-making process when it comes to investing. So anyway, look forward to seeing you tomorrow. We have the show tomorrow. Great chance if you wanted to ask questions, you can ask those live. You can send them into an email address that we'll give you, or you can put them into the chat on it. So our show is on YouTube. It's Talk Money with Tom. And it's from 12:15 to 1 Pacific time. So look forward to seeing you then, and we'll see what happens tomorrow. It'd be interesting to see if we get follow through to the downside, or do we get some bounce? You never know. So look forward to talking to you then. Thank you very much.